tonight's focus being on filing status and dependents, I wanted to talk about, obviously, we're going to start with the first one, which is the single filing status. So, a single filing status is for any individual that's unmarried and that does not have any dependents. That particular filing status has the highest tax ramifications as well. So, for example, for 2024, one of the things that matters is the standard deductions for single filers. And the reason that I think we can go in a lot of different ways about the filing status and the standard deduction for single filers for two reasons. One, because like I stated before previously, that it does have the highest tax ramifications and it sits in the highest tax bracket. But second, because so many of us as taxpayers and particularly parents, we have children who may be in that working age. So we may have teenagers or college kids who we still claim as dependents, but because they have worked and earned an income, they are eligible or entitled to file a tax return for themselves. Now, that standard deduction is $14,600, period. So if you have a teenager, and I've gotten this quite a few times this season over the last couple of weeks about dependents and their children who have worked, and are they supposed to file a tax return? Well, the IRS rules states that an individual, a dependent child, or an individual in general, doesn't have to or not required to file a tax return if they have earned income that is less than the standard deduction, which is that 14.6. So in along those same lines, let's use this scenario for single filer or a parent who has a child who worked or a dependent who worked and earned income. That individual or that child, what needs to be assessed is a couple of things. The first one being they can be a dependent and still file a tax return. It's how that tax return gets filed. So parents would need to make sure, one, that either they educate their children on what they need to do when they go to get their taxes filed and the information they need to share with whoever's preparing their tax return, or the parents need to make sure that they, accompany them and that they understand you can still be claimed as a dependent. So when you file your taxes or you have someone to file your taxes, they need to make sure that they indicate that. And on the face of the 1040, there's a box, there's like a space that talks about standard deduction. And in that space, it asks, can you or are you being claimed by someone else? If it's one of your children, a dependent, that box would need to be checked. Because what happens if that box is not checked, then that individual is filing their taxes. They're getting their own personal exemption, which means now the parent can't claim them anymore. Does that make sense, Robin?
Yes, it does.
Okay. So, and a lot of people don't understand that. So, I've come across that at least a half a dozen times in the last probably week and a half. So, I really wanted to talk about that so that we can better understand what that means and so that there aren't any issues, because the first return that gets filed with that social security number is going to be the one that goes. And then if the parents come behind afterwards and try to file, then their tax return is going to get flagged and they're going to get caught up in trying, why are you trying to file a social security number that's already been filed? And with what's going on today, we don't need any other reasons to be flagged for anything. So that's kind of one of the things and one of the specific things that kind of jumps out at me as far as, things that I think taxpayers should know, understand, and recognize as we go through this particular tax season. The next thing, so we talked about single filers. Then there are the other statuses, the married filing joint status. Um, the great thing about the married filing joint status is that you get to earn more income in a lower tax bracket as opposed to a single filing status or a married filing separate type of status. So then we have the married filing separately status, which is a little different than it used to be. And I've been in this game for almost 30 years. And in the past, it was always, if you're married, you're supposed to file your return filing jointly. Now, over the years, I've seen where the language in the code has become a bit more relaxed in that the IRS now allows individual taxpayers to file merit filing joint or merit filing separately, whichever one is the best or is most beneficial for them. So it could be for various reasons. I do remember going through one of the trainings a couple years ago, and this was kind of in the midst of the pandemic and stuff like that. And there were some situational things and trainings that we went through where there were married couples, but they were legally separated. But due to the financial burden, they could not afford to live separately. So they basically shared the house. And so the one of the spouses, the husband or whatever, lived in the basement, but they were still sharing the same residence. Whereas the language in the code before was very specific that if that you could not cohabitate or cohabitate and consider yourself married filing separate. So that has relaxed a lot. So there are people for various situations that do decide, married couples that do decide to file separately. One in particular reason is if there's some type of a tax lien or child support orders, and things like that that would cause the other spouse to become injured in any type of way. So, and there's an ability for a spouse that's in a situation like that to file as an injured spouse while still filing joint. It may take a little bit longer as far as processing return or what type of refund may be eligible to the injured spouse, but you can definitely do that. But now that the language has been more relaxed, it's more allowable for you to just file separately. The challenge with a taxpayer filing, merit filing separate is that if you do have a child who's in college or you have some other credits that you may be eligible for or entitled to as a married couple filing joint, you lose all of those credits. You lose the American Opportunity Credit. You lose the ability to have file for earn income credits. So there are some pushbacks and there are some um, negatives to filing separate, but in the larger scheme of things, taxpayers are allowed to do it. The fourth filing status is head of household, and obviously, head of household has a greater standard deduction than single, and it has a better tax rate as well. But you are supposed to be or required to be unmarried and have either a child dependent or some other type of dependent in order to qualify for that status. And that's pretty much the nuts and bolts of the head of household status. And then you have the qualifying widower, which that's not a long-term status, but when the year of the death occurs, then you can become a qualifying widower. But I mean, there's a description, there's some specific things you have to, indicate while you're filing that is that is the status. So I think um what I wanted to the points that I wanted to get across was one today that specifically spoke to what do you do when you have a dependent who works and earns income, a taxpayer can never claim or file W-2 income of a dependent. If that dependent makes income and they meet the qualification and requirements to file, then they need to file their own return. And there's a way to do that. We talked about that, making sure that we specify that you can be claimed as a dependent by someone else, and any federal taxes or state taxes that have been withheld from their W-2 would be refunded to them for the most part. Um, my own personal situation, I have a child who recently graduated from college, and he worked 3 years of his 4 years, and I filed a tax return for him, and the federal taxes that they took from him and the state taxes, he got it back in his own refund, but my husband and I were still eligible and allowed to claim him as a dependent. So I want parents to know that and understand that, or taxpayers in general. I also think it's important, and I don't know that a lot of people, a lot of taxpayers understand or even know the dollar amount, but for one, when we start talking about dependents and we start talking about, dependent credits, you have that age parameter. So for a child who's 16 or a child dependent who's 16 and younger, even in the womb, that's a $2,000 credit. That is a $2,000 credit. If the child is 17 or older, whether it's an elder, whether it's a parent, a grandparent, as long as you're providing support and meet the support test, and can legally claim that dependent, that's a $500 dependent. And that's the difference there. So it's two types of dependents. You have child dependents and you have other dependents. And there are two types of credits that go along with those dependents, which for a child 16 and younger, that's a $2,000 credit. And for an other dependent who's 17 years of age or older, that's a $500 credit. So that's that. And then I think the bigger overarching credit would be probably the earned income tax credit, which a lot of taxpayers are eligible for. And for 2024, that maximum credit is $7,830, and that's for a taxpayer with three or more qualifying children. So, um, with all of these credits, for the most part, I will say 99% of these credits, there's also a phase out period. So based on income, um, some of those credits may phase out. So it may start at 2000, but based on, your income level, that credit would eventually phase out and could phase out to zero, where you're not even eligible for that credit. But that would all be based on filing status and the tax bracket and the maximum income that's allowable based on that filing status and that tax bracket. And I'm trying to think mm, of some other things that might be. Do you have any questions, or, do you have some things that you would like to ask, or something that I have not mentioned that you
No,
may
you
have a
did
question about
you
specifically?
you did talk about the parents not having to claim their children's income. So if the child didn't, if they made money and it wasn't enough to file, the parent doesn't have to claim it as income on their return.
Right. So a parent would not necessarily claim, a parent can't claim any W-2 income anyway, because that's earned income that the child would file their own return. But the parent would still be allowed to claim that child as a dependent. Does that clear that up? Because I may have.
No, no, I'm just trying to make sure. So the income never gets filed since the child didn't claim it, right? The child didn't
Right.
file the
If
return.
it's below that threshold, that's correct.
Okay,
If they're not required to file, they don't have to file a return at all. So for 2024, if a child makes less than $14,600 in earned income, they do not have to file a tax return at all. The parent will just file as normal and they will claim that child as a dependent. But there's a, if they exceed that 14,600, then yes, they have to file a return. They will have to file their own, but they will have to indicate that they're being claimed as a dependent by someone else, which would be the
Okay,
parent.
I got it.
Okay. Anything else? Because your
No,
questions may help somebody else.
I'm just thinking.
And the relationship test and all of that is just, basically, it has to be, dependents have to be, your children or someone that you support. It could be an adopted child. It could be, if you're raising them, you're supporting them and all of that, then you meet the qualifications for it. And they are supposed to reside with the taxpayer. That's another, requirement, residency. We call that the residency test, the relationship test, and things like that. It doesn't have to be a person. So like, for example, if it's a parent and most of our parents live on a fixed income, we help a lot, as far as with financial, with their financial needs and things like that. So even if that's a situation and your mom or parent may not live in your home, excuse me, but you do provide 50% or more of their support, you can claim your parent as a dependent. For parents who are living off of Social Security, or if Social Security is their primary means of income, well, most people who receive Social Security aren't required to file anyway if they're below the threshold, the $25,000 threshold. So if it's a case like that, and a person doesn't have to file, or if they're receiving Social Security disability and they're not required to file, you can claim that individual. You can claim that family member as a dependent if you are in fact helping to support them.
Okay.
Yeah, for sure. And I don't think a lot of taxpayers understand that. I think there may be a large population of people who actually do help their parents, but maybe don't understand, or maybe haven't been educated on the ins and outs of how to, legally claim their parent as a other dependent. Does that make sense?
Yes, it does.
Hmm. Um, And if you have parents, I think another thing that taxpayers may not know, maybe, is for standard deductions. If a taxpayer or an individual is 65 or older or blind, there's an additional deduction. There's an extra deduction of $1,950 that can be claimed. And if they're both 65 or older and blind, then it goes up to $3,900. And I say that because my mom has glaucoma. And so my mom is losing her sight. My mom is 84 years old. So, and I help support her. That is a situation that if it ever gets to the point where my mother loses her sight completely, then that would be an additional, additional opportunity for an increased, credit or deduction. So I just think that there are a lot of things, and I think for the most part, a lot of individuals, they don't want to talk taxes when it comes tax season. Everybody shies away from it because they're afraid of it, and they think, that it's always going to end up being a bad thing, and it's not always a good thing. What I do think happens is that we don't recognize how many opportunities we have available to us to maximize our deductions and credits on our tax returns, because taxation is not a conversation that most Americans want to have.
No, they don't. As far as like with your mom, when they, as far as like being blind, do they have to be declared legally blind or partial, or could they be partial blind?
It's usually, well, when you say declared, so there's occupationally blind and then there's blind, right? So either one of those situations will suffice. It's not like you have to go to the doctor or, I don't have to go to the doctor and take my mom and say, hey, I need a statement for the IRS when I file my taxes that my mom is legally blind. You know what I mean?
Okay.
Mm-hmm.
Okay. Gotcha.
Yeah, and glaucoma runs heavily, on on my mom's side of the family. My great grandmother, I never saw her with eyeballs because she had glaucoma and they removed her eyeballs.
Oh.
Yeah. Yeah, way, way, way back in the day. Because I think when she passed away, I was a little girl and she was in her 90s then. So,
Oh.
yeah. But it's I'm trying to get to a point where I'm trying to make sure that I educate as much as I can because I don't want people to be fearful of taxes and I don't want people to be fearful of taxation. The same way we work hard to earn our income, we should be working just as hard to maximize deductions and credits and make sure that we, reduce our tax liabilities as much as possible. And that's my goal. That's what I'm here for. I'm not here for the all the clicks and likes. I love what I do and I love um educating and informing people about it.
Okay.
Do you have any other questions?
No, not at this time.
Okay. Well, I it's 7:24 and I like to even when I'm teaching in classrooms, I try to make sure, 20 to 30 minutes I'm not talking and then we can have a conversation and, kind of, feedback and interact. So I don't want to drown you with too much information, but I want to know, if there's anything else that if that you would like to see covered maybe in next week's session. I know we have, I have a lesson plan laid out, but if you want me to go through something else related to any of the previous topics, I can do that. I just want it to be useful information and I want it to be helpful to the individuals who decide to participate and get involved.
Okay, so I do have a question as far as with the filing statuses. What
Uh-huh.
if you have joint custody of a child? How does that work for who claims the dependent and when?
Okay. So when it comes to joint custody, it's typically based on that custody agreement with whoever the custodial parent is. And there's an area in your tax return. It may ask some specific questions regarding that. And in addition to that, at the very end for tax preparers, I can specifically say we have a due diligence requirement. So we're supposed to have that conversation and explain the requirements if there are children that are a part of a separation or divorce. Who has the legal right to claim the child? You could have an agreement that says that you carry the child every other year, every alternating year. So the mother may be able to claim the child on odd number years, and the father claim the child on even number years. As long as that there is an agreement, it has to be in writing in order for it to be legal. If it's going to be, one or the other, or if there is an issue about who's going to claim the child. So if it's not an amicable situation, you definitely need to have that in writing.
Okay.
Yep. And if let's say I have a client who that was kind of the situation where the mom is the custodial or was the custodial parent. The father was kind of challenging that kind of situation. And then a few years after the divorce, the father became sick and started living off of Social Security, disability. At that point, he doesn't even have to file anymore. So you see what I'm saying? So he had to give her written consent to claim the child on the years that he was supposed to claim the child. You understand
Okay.
what I'm saying?
Yes.
So when she would file, then she could claim him, but she had to have. And I remember when they came to me and I said, "Hey, I need some, you got to have something in writing. We have to have the form. We have to have it in writing that he's giving you the authorization to claim the child. Otherwise, you're going to have some problems if something crops up later. They're going to say that you were not entitled to the dependent credits and exemptions, and they're going to come back after you for that money back."
Okay.
Yeah.
Okay.
Those are good questions though.
I think that's all the questions I had.
Okay. Well, like I said, you have my email, you have um, the website. If you have questions, please feel free to send me your questions or your comments. And if you don't mind, I would like for you to post a comment or let us know how we're doing. If this is good, bad, or indifferent, let me know how I can make it better or more palatable or more useful for other people like yourself who's
Okay.
interested in this topic and interested in how to do better moving forward and just are looking for ways to get the information so that you can, move forward in that direction. So any comments, feedback, any of that is will be fully appreciated.
Where do we post the comments or feedback?
So I'm going to post the session on YouTube.
Okay.
And you can go out to YouTube where the video will be loaded. I also loaded a video today. I uploaded that one. That was from last week's session, and that was on, types of income. So session one and session two now is out there. So if you get a chance and you are able to review that video, I want you to also comment on that as well.
Okay. And so if I have questions, I can ask the questions on the video and you'll respond back?
You can ask the questions on the video or you can email me directly. You have my email address. It's tjackson at
Yes.
tsjfinancial.com. Our website is www.tsjfinancial.com.
Okay.
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 Well, I thank you so much for joining us tonight and I look forward to seeing you next week.
All right. Thank you.
Okay. Have a good evening.
You too.
All right. Bye bye.